All right, Wise Guys out at the Market Movers Conference here in New York City. We're downtown New York City, right by the New York Stock Exchange. And some great CEOs joining us today for this conference. A little earlier, we had Alex Rodriguez, Grant Cardone. A little later, Bob Bazzani from CNBC is going to be here. So, star-studded event, and lucky enough to get a few minutes with James Anderson. James, thanks for giving us a few minutes. He's the CEO of SD Bullion, and the hot new craze is gold. For the last 6 months to a year, it's going crazy. But I wanted to talk to you today, not just about gold, but the implications of gold prices going so high. As your contention now that people in China feel gold might be overheated, and they're hoarding silver. And silver is used in rare materials and a lot of our electronics and stuff. Give us your thoughts on how the geopolitics whittles its way down to the metals.
Sure. I mean, just to refresh everybody's memory, right? We had a big run in gold and silver toward the end of last year, and the first month of this year, they kind of topped out and dropped down since the Iran issues come up. It's all kind of moved toward oil and energy has been the worry. Ultimately, gold is in a bull market. Like, gold has a lot of fiat M2 currency around the world to catch up to. So I know $5,500 gold nominal record price sounds large, but in the context of measuring versus the S&P 500 over a long time frame, I mean, we're not even yet at 1-to-1 with the S&P 500. And in these big commodity super cycles, you can get to a point where, an ounce of gold can get you 2 shares of the Dow. That's how crazy it can get. Right now, it's 1.5 ounces it costs you to get the S&P. It'll probably cost you half an ounce at some point down the line.
Got it. I always wonder, and, I like metals. I understand the value and, how intrinsic it is. But I've also been kind of a Bitcoin evangelist over the years. And one of the things that I say to people sometimes when they ask me to compare both, and I want to get your thoughts, whatever they are. Let's say I'm a real, end of timeser and I got all this gold in my house, right? And something bad happens. Well, I can't go down to the Dunkin' Donuts and break off a piece of gold. And I can't go down to the gas station and show them my statement from my gold futures account, right? And to the extent there's still electric and internet, there are a lot more places where you can buy things with Bitcoin.
Yeah.
What do you say, pro and con on that?
Yeah, I totally understand. On like a peer-to-peer basis, people can use Bitcoin. Like, for instance, some of the tankers that have to get through Iran are using Bitcoin to pay off the government, because it's just a faster way to pay off someone really quickly with no remittance. Whereas on a big structural basis, gold is being used by China and other major players to settle some trades, but we don't get to see it because it's a very opaque market. But on like a person basis, people who are watching this, retail or what have you, I mean, if you live in a large metropolitan where in the United States, there's gold coin shops all over. So if you walk in with a silver eagle, gold eagle, especially during a crisis, usually you'll get a pretty good bid on those products. So to turn it into cash literally only takes, a business day. You'd have cash right in your hands. So the argument that theoretically you can't use it right away, it's almost as liquid as Bitcoin, and it's probably faster in the sense that so many counterparties know what it is. And sometimes Bitcoin, you need a specialized person who's wanting to buy it.
I mean, I would just say, just to have a little bit of an academic back and forth on it, that I'm not saying SD Bullion, but there are people out there who think they're buying 100% gold coins.
Totally.
So before you could spend your coin, you'd have to find a coin shop.
Who knows what they're doing.
And then the coin shop's probably going to want to melt it down before they give you any money for it.
You have non-invasive technologies that can verify it now. And plus, if you've been in the game long enough, you know what a real coin is.
Yeah, you know the color. You
can tell.
The weight.
Even the highest-end manufactured fakes out of China, unless it's like a thick, well-done fake, which is very hard to find, usually it's pretty obvious.
Tell by the weight.
Yeah, by the weight.
My grandfather was a big coin
basically
guy.
To have a perfect tungsten ingot, exceptionally done, I mean, it's very rare to find that. It does happen, but it's not the common.
So, I recently wrote an op-ed for NEWSMAX trying to encourage President Trump and the crypto team to do a nationwide awareness program for certainly people who are seniors who wouldn't be that adept at new adopting, to get them to open a government wallet and incentivize them by putting a couple $100 in it, right? And my thought was, for an immediate disaster recovery, if banks crash, banks are closed for a week, before some older person is going to get out and go to the coin shop or whatever, if they have a couple $100, I was calling it a disaster recovery money. You know what I mean?
Sure.
Do you think that's at least feasible or
Yeah,
viable?
I think it is. It's viable. I mean, like, ultimately, when it comes to like people who are elder, that's why silver's always nice, because it's so much smaller and you can transact in such small amounts. I mean, I've seen older people who kind of live off their holdings. You know, every month they'll come in and sell a gold coin, or they'll sell 100 ounces of silver, and that's kind of how they make ends meet or supplement their income at an older age. It's very common to see that.
Tremendous. So, on the way out, and I appreciated what you said before, you know, compared to the S&P, compared to the M2, it seems like there should be a little more room to roam for gold.
Yeah, ultimately we could thank Bitcoin a lot for getting people ready for, I think, what we're going to see. You're going to see 5-figure gold at some point.
You think so?
Yeah. I'm pretty confident of that, and that'll probably be toward the end of this decade into next. Yeah.
All right. Well, I'm not an investment advisor. I don't play one on TV. I don't give recommendations. See a professional.
I'm personally speaking for my book, because I'm very aggressively allocated into bullion.
So you guys, principally as a company, are going long gold.
Yes. I mean, we basically have a cash basis to make our company work, because obviously you need fiat US dollars to work in this world. But we have our inventory, majority holding of our company is in physical bullion. It's what we use for our, lifeblood of our business. So yeah, we are very aggressively long.
Well, look, years ago they would have called us crackpots and cuckoos, but these days it's got to be part of your portfolio if you're a smart, diversified investor. I'd say, have a blend of all things, and including gold and including Bitcoin. But I personally think Bitcoin's the only one with long-term credibility.
I mean, look, the Bitcoin thing, I'm still a little bit of a skeptic in the sense that I've not seen central banks go out and buy it. That's my worry. And I've not seen any large, I mean, it has been somewhat institutionalized, but I don't know where the next major capital flow will come from. That's my big worry. And when I look out at bullion, I really think that it's the safer play, because it cannot go to zero. Whereas, something goes haywire in the system, who knows, with cryptos and such.
Your wallet don't open in the morning, you're dead. Your gold's still going to be under your bed.
That's it. Yeah, I mean, you're talking about like the risk profile, the worst downside versus the upside. And in a world where I think the return of your capital is more important now than return on capital.
Without a doubt.
Yeah, I think that's why bullion has to be somewhat allocated in your position. And it's more than the 5 or 10% nonsense mantra. I think you need to be 20%.
No, to your point, Bitcoin could be zero tomorrow.
Yeah.
Gold can't.
It can't. And I mean, look, it's just a question of how much percentage. But you should, if you're into Bitcoin, definitely have an allocation of that. But I think bullion is probably higher than most people think. Like the CIO of Morgan Stanley last year talked about the old 60-40 portfolio is kind of gone by the wayside. The 60-20-20, 20% bullion is kind of the new, and you see this year right now with the 1/3, 1/3, 1/3. Like the commodities are doing very well. So eventually, in a commodity bull market, usually gold leads, commodities catch up, then gold does more. So I think that's kind of where we're at.
All right, well, we got our eye on the ball on gold. We got our finger on the pulse of gold when we got James Anderson with us. Brother, thank you very much. He's with SD Bullion. Check them out, and some great insights on geopolitics and how it affects metals and stuff. Thanks a lot, brother. Appreciate it. Thank you for tuning in, but do not move. A little more Wise Guys right after this.